Good morning, everyone, and welcome to a new episode of ZF. Today's opening bell, or how we call it here in Romania, ZF Deschiderea De Astăzi. My name is Liviu Popescu. I'm a journalist at Ziarul Financiar. Together with my colleague Robert Mana, we are discussing with TARIQ FANCY. TARIQ is an investor, an entrepreneur with Canadian origins, and he was the first chief executive investment officer of BlackRock on sustainable growth. TARIQ, thank you very much for taking your time. How are you? How is Bucharest? How do you find Romania?
So good morning. It's a pleasure to be here. It's my second time in Bucharest. I passed through once very quickly, but for personal reasons, and so it's my first time here professionally. I have had a lot of experience working with the Romanian diaspora, right? Friends, but who are Romanian, Canadian, and in other places, and so always had a good experience. So it's really nice to be here and to plug into some of the local business community.
Let's see, an investor right now, what companies do you chase after? What do you look, the first thing you notice at a company and you say, okay, I'm going to invest in this company?
Well, so, the way I'd answer that is saying that my history was originally learning to invest doing distressed investing, or it's a form of value investing, but it was after the dot-com bubble burst where I had been a tech banker in Silicon Valley and then ended up investing in the aftermath. And that approach led me to discipline where I'm very, very focused on a value approach. I'm very focused on cutting through the numbers and real cash flows. And I think often we were looking at companies that had fundamental value, but they were going through a need for a turnaround or distress. And I think one of the skill sets you learn a lot in that world is you have to parse through bullshit. Right? Mm-hmm. Because the truth is, if you're investing in a sector where everything's growing and everyone's going well and the startups are getting funding and you have
bull market,
it's a boom market, and every company, they have a kitchen and it's got lots of food and everyone's happy and they get massages. I originally started investing in the opposite, right? Mm-hmm. These are the companies that are having a hard time and they're going through distress or even in bankruptcy. And there's real value there if you figure out how to invest and fix it. But you also know that you have to cut through all the noise because you're going to get a lot of storytelling and get a lot of bullshit. There might be something hidden in the numbers. And so you take a very, very, a very methodological look of doing a lot of due diligence and cutting through the noise and looking at the numbers. And so I tend to be a very numbers-oriented person with a focus on, can we figure out a model that produces real cash flow?
So basically on the knife's edge, investing in companies, but weren't you afraid of those companies going bankrupt?
I think, yes, you always are.
The biggest fear?
Their highest, that's exactly it. Your biggest risk is that they go bankrupt, but because you're not the original investor in the business where it then crashed, you're newly coming in and you're looking through these companies. You tend to do a lot of work up front, and you want to get a lot of comfort that you're going to go in and invest and you have a very clear thesis about what the business did wrong. Did they mistime the market? Did they build a cost structure that was ineffective or launch a strategy that was wasteful? Whatever it is, there's some kernel of value, but it's obscured. And that's a kind of exciting thing because you go in and you fix the business. Mm-hmm. And if you think about it, it's like a private equity strategy, right? So we had 10-year private equity funds, but we were the outliers in the fact that we used to do, in my view, a lot more work than the actual private equity firms. Because the average private equity firm does an LBO, right, leveraged buyout. And they'll say, here's a company, let's make up numbers, 100 million of cash flow or EBITDA. We're going to buy it for 8 times, right, so 800 million. And we're going to put 600 million of debt, so 6 times debt. And they just run the numbers, and it's a lot of financial engineering. We would go into a situation where that leverage buyout failed. Mm-hmm. Now this company is not making 100 million of cash flow. They're actually making minus 30 million. It's very hard to value it because you can't put a multiple on negative cash flow. And so you really have to roll up your sleeves and figure out, what can we do with this business to fix it and turn it around? And what I'm working on something new in that space, and have some partners on it, and they're, one of them's an operating partner, and he loves this stuff because it's an intellectual challenge. And it's quite exciting when you fix a business that's failing, because it sounds bad. You're called vulture investors because you're going for the half-dead companies. But in many cases, we had invested in companies that were employing a few hundred people. They shrank all the way down. We came in with a plan, we came in with new capital, and we reinvested, and we turned the thing around, and they were employing thousands of people later, and shareholders did great. And it's a cool story.
Like revigorated the business.
Invigorate the business.
For instance, before we pass on to your experience at BlackRock, what were the highest yields for your investments, like the best investments you've made?
So, I mean, a lot of the investments that I had made in the 2000s after the dot-com crash, I mean, they had an excess of 50% returns, annualized.
50% per year, okay.
Yeah, per year, yeah. So what's really interesting about that is that I learned this early on, is that when you look at an investment strategy, not all returns are created equal, right? So the key is not just what return you got, but what risk were you taking in actually doing, because in theory you get like 1,000% return playing roulette and taking risk, but realistically I'm going to lose money most of the time. And so what we found was interesting was that we could go into situations where we would invest often in the debt, or we would invest with our what we felt was like our downside was protected. So we had some level of security. And so it was reasonably safe, but then also get a lot of additional return from the turnaround. And struck us as a very effective risk-adjusted approach to investing because, you know, again, you're going to get a very good return.
Yes.
But if it doesn't go well, it's not like investing in crypto where you can also get 100% return, but like there's no way to have any understanding if there's any intrinsic value underneath it. Whereas we would be understanding our worst case scenario, there's real asset value in this business that can be sold, you know, which you don't get in a lot of parts of the market where, you know, if it goes wrong, you get zero.
Tangible products or even services to put the finger. How is working for BlackRock?
Well, I mean, working at BlackRock was interesting. I mean, I've worked at a few different places. BlackRock is a particularly large firm that has grown from founding in the late 1980s to the largest investment firm in the world within like 30 years. So as a result, it tends to be a lot of acquisitions that have been done over time where they've bought different businesses. And so it is a gigantic firm that is global, but then sometimes some of the pieces feel like Frankenstein where the body parts are stuck on. It's not, I think the management, they're doing the best they can to integrate it. And, you know, they're doing a decent job in a lot of cases, but it's just a product of growing so fast. And so one thing about the firm is you get a very good vantage point of what's going on across different sectors, across different geographies, you know, all across the board, in different parts of the capital structure, debt, equity with different risk return, because they're a behemoth that has tentacles everywhere. And so I always found that was, it was less interesting to me from an investment perspective because the role I had was more elevated and I wasn't doing as much of the individual investments. But it was very fascinating from getting a sense for how the system works because you really get a look at all the pieces. In some ways, it felt like a microcosm of capitalism and capitalist markets because you had all of the different flows playing in, you know, out in different ways in different parts of the world.
And now, sustainable. We are here at Odeon Theater when you had a presentation regarding the sustainability of some businesses. Let's see. We've been talking about sustainability and ESG for a couple of years now, but we've seen little to no changes. For instance, there's a war going on in Ukraine. The temperatures are rising. Each year we read some news that there's a new historic high temperature. And the inequality wage-wise, it's getting deeper. How come, or how can we prevent, or why do we still talk about sustainability for the people? Is it business-wise? Is it a good investment?
You know, it's interesting. I mean, I think there's two questions there. There's a social, societal question, right? Because all of us will work in individual jobs, but then we leave and we're members of a community and society, citizens in a democracy. So I'd separate those out to say there's a political, social question around sustainability where I think that it's just prudent. It's a prudent approach to protect the public interest, right? I'm a capitalist. I started my career as an investment banker. You know, invested throughout my career. I now teach at Stanford Business School. For me, I think it's important that we always understand that the profit motive is exactly what we do individually in business. That's almost like a competition, right? That you're competing in the market. But broadly speaking, you can't lose sight of the fact that we can't destroy society on the way, because over time you will sow the seeds for the system's collapse. And so what worries me significantly about America today, as a Canadian who grew up 2 hours from the border, and then I studied in the US on a scholarship, and I spent my 20s in New York in finance, I worked at BlackRock there. What worries me a lot is that I think the business leadership is losing the support of the public because they're perceived to be doing what's only in their interests. They're perceived to be getting richer faster than any business leaders have in the past. They're doing it in ways that create inequality, underpay workers, destroy the environment. That may sound like a great way to make money in the short term.
In US or in Europe as well?
This is particularly pronounced in the US.
US, okay.
I think the Europeans sort of follow a little bit behind, but they're not, I think culturally they have taken a more expansive view of responsibility. But I think the New York version was, if you think of the movie Wall Street with Gordon Gekko, right, from the 80s, you know, he gives this famous speech where he says, greed is good. And I agree up to a point. I think if, as you know, sort of a banker and economist, if you're talking about incentives and personal incentives driving a broader sort of economic development because we're more likely to compete and we're likely to innovate, I think that's absolutely true. And I think China has actually done an amazing job of, since 1978, of building incentives into the system that unleash their potential. But I think the American version has gone to the point where they say greed is good, and it doesn't matter if you take advantage of legalized bribery to pay politicians, right, and then hide your political spending, which since the last 15 years they've been doing after they changed some rule called Citizens United around political spending. You just have a lot of things that are just not in the public interest from a long-term perspective. And I think that those are the kinds of approaches that they show a business leadership that's willing to do anything to squeeze the next quarter's earnings a bit more. And I think that's the kind of foolish approach that you win a few battles and you lose the war, because eventually the public is fed up and they think that the system doesn't really work for people. And I think today in the data you see that, right? 3/4 of Americans believe the economic system is rigged. That's been the case for over a decade. So eventually they're going to vote for someone who's going to promise to break the system.
Break the system, like an implosion for the economy?
Pretty much, yeah. I mean, they're going to go and they say, oh, it doesn't work for you. Well, I'm going to go fix it.
And then the question is, fix it in China.
Sorry?
Fix it in China, perhaps? Bring products from foreign countries?
I mean, you could. I mean, the problem now is that they've fallen behind in a number of areas where China has pulled ahead. You know, I lived in China in 2012, 2013. I was truly impressed by the level of the quality of what they were building from a technology and engineering perspective. And I think people were stuck in this mindset that they were communist. I mean, on the surface, they're communist, but they're not communist like North Korea. Because I went there and I was buying technology over 10 years ago and I thought, oh my God, this is like, they're producing better stuff. They're producing better outcomes. And so now with electric vehicles and a whole bunch of other sectors, they are producing excellent products at cheaper prices than us. And so that's actually put us in a position where we have to put up tariffs to protect our own industries because we can't compete with them, right? So I think in some level there's a way you fix the system, but ultimately you need some level of planning for the long term. And that's the one thing China's good at. They do think very long term rather than next quarter. And you need to do it in a way that gets buy-in from the population. It doesn't massively increase inequality. Because at some point, markets and business, no matter how important they are and how much we love capitalism, an honest view of history is that capitalist systems have to serve the public interest over the long term. If they don't, people eventually get mad and say, this is rigged and doesn't work for me, and they overthrow it. And I think the US right now is in a system where the majority of the population doesn't trust their economic system. The students I teach at Stanford, I don't think they trust the economic system. And it's a recipe for instability over some period. I think the Europeans are doing a slightly better job, but I do think that they haven't broken from the American way of doing business, which, again, I'm a capitalist, but I believe that we should be honest capitalists. And what the problem I had with BlackRock and sort of my old boss, Larry Fink, back in the day was they would talk about responsible capitalism and doing the right thing at Davos, but actually they didn't mean it. It was just a smokescreen so they could sell more products. And I think that approach is not the type of leadership we need to ensure the stability of the system long term.
How do you see, TARIQ, how do you see the role of private investors in venture capital funds, because we can talk about ventures as well, in supporting green innovation, especially in this direction of startups? Is the finance support there, or is it lacking?
In which market?
In green tech.
So, that's an interesting question, because when you talk about green, it means a million different things. It means taking existing businesses and implementing tools, this, that, and the other. the segment of creating new businesses that are innovative and solutions we need, whether it's something in carbon capture and storage or this or that, I think that what we're seeing now is a retrenchment of some of the capital behind that in certain markets, definitely in the US. And I think that the way I look at that is a little bit of an opportunity as an investor, because if there's 50 investors bidding on the same thing, and then there's a hype cycle, people say, oh no, this is too early and I don't believe in this anymore, and 50 investors leave and you show up, you're actually going to get a pretty good valuation, right? And so some of the technologies around the green transition are more mature today than they were 3 to 5 years ago. I would argue the need for them is possibly greater because, again, in the last 3 years, Russia-Ukraine has shown people the importance of energy independence, right? And not needing to necessarily pull in their natural gas and be held hostage to that. And I think all of these questions, a lot of what's being done in the green space can answer them. But there was a little bit of a hype cycle around some of what was being done. And so I think that there's a bit of a retrenchment going on with the funders. I think that's an opportunity as an investor because I think, generally speaking, if there's less bids at the table to buy the equity or buy into the capital structure of business, you're going to get a better deal.
For instance, in this part of Europe, Eastern Europe, in Romania, we are having this emerging startup scene, not only in green tech innovations startups, but also in other startups. But yet still little capital available for ideas. And my question to you is, how can the region or how can Romania attract more investment in green innovation or even ideas? Like you've mentioned, you're a professor.
Well, so I think, I'd say there's two ways to answer that. One is how you can get more money, and the second is actually sometimes you don't need it. So the first part is, I think to attract more investment capital in these areas, I do think that the government can play a role in helping to organize an ecosystem and arrange them in a certain direction. And again, some of what we call centrally planned economies like China, well, let's take Singapore. I've lived in Singapore for a while, very efficient, and they'll figure out ways to create some sort of a system where they'll have tax breaks, potentially some funding support, this, that, and the other to create an innovation ecosystem. I think if you have that, you can try to attract capital. One way you can do it is you can push capital. The government themselves can push it in a way that doesn't have the government choosing the winners and losers, because you don't want that. So in Ontario, Canada, there was a program called the Ontario Venture Capital Fund, where they put public capital, but then they allowed real VCs and others to invest alongside it in a way that I think created more investment capital in the ecosystem, because you do need to find ways to make sure that the financing is available for the good ideas. But I would also temper that by saying that money is not the only thing, right? And I think if you look at the AI race right now, I'm quite bullish on what's happening in Asia and certain markets where they don't have unlimited access to capital. I think, in fact, the fact that it's so easy to raise capital today for the AI companies in the US means it's just a capital raising game. They're just raising more and more money and raising momentum. And I have not seen, first of all, any focus on energy efficiency. And these things are consuming massive amounts of power, and they're not adding a great deal of economic value yet. They're costing enormous amounts of money. And so you have this situation where if you can raise lots of money, you just go and do it because it's a race to raise money. And then I think that sometimes takes away the need for businesses to be built, especially startups, to be quite frugal, right? Because you have now startups that are being funded by SoftBank and they're worth $500 billion and so on. And that's a pretty fast ascent for a business that still don't have any revenues or profits. So I would actually be quite interested in seeing what's happening in markets where they actually have to operate with constraints. They don't have the latest chips. They don't have unlimited money. Because my guess tells me they're going to figure out a model to get to near the same results for a fraction of the cost. And that comparison is almost sometimes a bit of the comparison between the Toronto Waterloo ecosystem, where I'm from, and Silicon Valley, where I spend time working, because the ones where I grew up have a lot of harder time raising money, but sometimes actually they end up being better entrepreneurs as a result.
TARIQ, 3 more questions. I can split them in 2 because you don't have a lot of time here. We've been discussing for 20 minutes. let's see the risks. And do you think that there's a risk that green investments will repeat the dot-com bubble? Is there any resemblance?
I do think there is one. I think that the dot-com play was a tragedy that I saw in 3 acts. Act 1, the late 90s, I was a student in the US and I was doing a lot of programming stuff on the side, and I had offers to work in tech, and this was the beginning of the internet, so that was exciting. I accepted an offer in 2000, and that was the peak of the NASDAQ, and it was to be a technology investment banker in Silicon Valley, and then everything crashed, and the NASDAQ plummeted, and that was when I moved from being practitioner to more understanding the financial pieces. And then finally, the 3rd act, I was an investor in the post-dot-com wreckage. And in that context, what I saw was a lot of really good businesses, but they had mistimed the market. So they built fiber optic cables to carry all the internet traffic because they realized this was the beginning of something new. But the demand was a few years later than they expected. And then these companies had a hard time because they had debt financed and they had no way to pay the debt. But they were fundamentally good businesses. Mm-hmm. Then you had a bunch of other businesses that, like pets.com, which had the dog sock puppet, it was just a story. It was the rising tide lifted all the boats, and people didn't actually take a close look at whether there was real business underneath it. So at the end of that period, after the dot-com crash is where I started investing, and I learned to sort of look through the good from the bad and figure out there was a lot of bargains when the market overshoots up and overshoots down and you're at the bottom. I think that the green, the sustainability trend is going through the exact same sort of cycle.
Okay.
I think that that cycle happens precisely because this mega trend is inevitable, right? So in 1998 or 99, if you were someone who sat in New York or San Francisco and you sent an email to Tokyo and then it arrived instantly, you kind of said, holy shit, like this is amazing. And no one thought we're going to go back to sending paper mail. Right? They said, this is it. We're not going back. But sometimes the fact that that trend is so inevitable and everybody knows the direction means you get sloppy and people forget the speed is different in different areas. And you have a lot of froth, you have a lot of hype, and you almost need a bit of a backlash or a downturn to act as a quality filter. So everyone stops and they say, which ones are good and which ones are bad? We can't finance all of them. Well, the green sustainability megatrend is the same, right? We know it's a massive global trend that is going to keep moving in a certain direction. And I don't know how many electric vehicles will be on the road in 5 years' time, but it's definitely going to be more than there are today, just like it's more than there were 5 years ago. So this shift's happening across every part of the economy. We're seeing increasing electrification of all sorts of sectors, even including military, right? And so I think, you know, that trend is not going to stop, but within the trend, there's the inevitability of that direction, of that trend, caused a bit of euphoria and hype. And that's, I think, where we're going in now, where, if you care about sustainability, roll up your sleeves, because now is actually the time to double down. I think a lot of the hype is gone, a lot of the grifters and a lot of the sort of marketing-oriented BS I was seeing in New York has gone away, because they were just treating it as marketing and PR. And then when there was a backlash politically, they said, well, there's no more marketing benefits. They stopped doing it. But that's not what we need. We need real businesses that are building this as part of their operations. They're innovating and building products we need. And I think we're going to see a lot of opportunities coming out of that for disciplined investors, right? So one thing I'm looking for actively are businesses that they will be part of that long-term sustainability trend, but they're running low on capital, they need a turnaround. There's a tough situation, and that's where myself, my partners, and what we're working on, we can come up with something really new and interesting that helps them recover. So I think that's one thing that'll happen, and I think otherwise there'll be a sort of shifting of the narrative. But I view all of that as a necessary and important part of any mega trend. You have a lot of hype in the beginning, it pulls back, you clean up everything, and then you go with the models and the approaches that work and that are efficient capital allocators and good investments.
What is the next big thing on the markets right now?
In terms of companies or ideas?
In terms of ideas and how we can multiply our investments, like NVIDIA perhaps did in the last 10 years, let's say.
It's an interesting one. I mean, I think that I think probably the most focused on areas are probably around efficiency and AI, right?
Okay.
I mean, I think that we've seen such astronomical amounts being raised to invest in data centers. And at levels where, I was in Texas last month and some guy who sells turbines said, like, and one of the big companies said, we can sell whatever price we want. Everyone's just rushing in and demanding power and data centers, and they're building in a race. What I think, first of all, I think that'll turn around a bit when people realize the profits aren't coming as fast as they expected. That's not to say I don't think AI is a great technology, but it's exactly like the beginning of the internet, right?
Mm-hmm.
It was, of course, a great technology, but that's what created this boom-bust cycle. And I think we're seeing what's happening in AI now also. But I think what's been underinvested in are things around energy efficiency, right? Because if you can just throw lots of money and build everything you want, it's not power efficient at all. Maybe you're using the most expensive chips in the world. I would be curious to see models that actually are building where we're going to be, I think, in a year or two, which is that people are going to say, wait a second, we can't keep funding losses forever. And they're going to look and say, can we make this technology more energy efficient? Can we implement it with less computing power? I think that's a natural reaction to the fact that technology is great, but the revenue potential today has not met what people have been led to believe in the last year or two. And yet they're raising even more money. So at some point as an investor, I look and I say, okay, well, it's going to need to be some profits out of this. And that's going to probably mean doing what you're doing more efficiently with less capital, unless you can produce trillions of dollars of revenues. But so far, that's been a story, and it hasn't happened.
And my last question, TARIQ, what is your biggest unanswered question? One that you do not have an answer to?
I think the biggest question I'm wondering now, and again, I talk a lot about the rise of Asia when I'm doing business and doing work. It's partly just because I have a global background. My parents grew up in Africa for generations. They're originally from South Asia, but moved when they were colonies. I was born and raised in Canada. When I was 18, I left for college, studied in the US, the UK, France, and Singapore. Yeah, I did Latin America strategy, speak Spanish, Portuguese. I've lived in China. I just love traveling as one of these things that I picked up as a family thing. If I look at the world today, I think we're seeing a massive global shift in how people view different powers. And I think the question I'm trying to figure out is, if there is a China versus US world, who's going to win? And I actually am starting to lean towards the fact I think China is going to pull ahead. And again, forget about them being communist. I did work there. It didn't look anything communist to me. It looked like the highest competition I'd ever seen, producing amazing products. They just are a very engineering-driven society. And every few years I'd go back and I'd say, oh my God, they've built all these incredible things. They've pulled more people out of poverty over decades than has ever happened in human history. And they're advancing and owning entire sectors, right? Like electric vehicles. To me, it's extraordinary. 10 years ago, they were nowhere. So this year, they're going to sell more EVs in China than the US will sell cars in total, internal combustion engines or EVs. And so I think the wrong mindset is that this is some centrally planned North Korea. I think the right mindset is, holy shit, they're producing really good stuff. And it's so effective that today in North America, we have to put up tariffs to keep those Chinese electric vehicles out. Because as much as we want to decarbonize and get an effective vehicle that's inexpensive, if we let them in, we're going to lose our entire automotive sector and lose jobs. So the fact that we're put in a position where one of the energies of the future, we cannot compete with them without putting up trade barriers, was to me an extraordinary warning signal that what I had seen 12, 13 years ago, and I did a turnaround of a software company, I was very impressed with the quality of the people, right? They're churning out engineering graduates at a level, and they're implementing them across the economy. And I wouldn't have said this 5 years ago, but I'm actually concerned that America is doing exactly the wrong things right now. They're betting on yesterday's technology. They're destroying faith in the system in terms of, can you trade with them? I mean, as a Canadian growing up 2 hours from the border, we don't trust them anymore. This is extraordinary. This happened last year. And I spent the first quarter teaching in California, and then I got back in April. And there was an election in Canada. And the election swung 30 points because of what Trump was doing in the US. Attitudes have changed. I think that we're moving into a world where there's no clear leader. I think the assumption that the Americans would lead, everyone's realizing is now is not going to happen. And in the void of what's left, I wonder what comes on the other end of it. But I do think that Asia is rising in a way that they think long term. They've invested a lot in engineering and technology. And I think that the global leadership, it might be, it's going to start switching hands in the next 5-10 years. That to me is the big unanswered question, right? As a Canadian, if I were running the economy, I'd say, who do we want to align with? You have to plan for where the world's going, right? It kind of, you're playing soccer, you're not running where the ball is, you're running where the ball's going. Mm-hmm. And I think that global shift is the one that is, in the last few years, it's surprised me to the point where I think we are actually witnessing that shift happening. And if things don't change, I think it's very clear who will have won, in my view.
Okay. Thank you very much, TARIQ FANCY, for the explanations, for taking your time, and for accepting our invitation here at ZF Deschiderea De Astăzi. Thank you very much.
Thank you for having me. It's lovely to be here in Bucharest.
Mă mulțumim tare mult că ne-ați urmărit. Până data viitoare, fii întins la investiții câștigătoare. Numai bine!
Știu ce spun.
Angajații de la finanțe protestează față de măsurile de austeritate. El a fost votat, dar
acum e vina românului.
E vină. E reacție.
Știu ce te interesează. Uite cum arde toată Europa și la propriu și la figurat.
Niște fenomene naturale.
Mor oameni în fiecare an. Decesele cauzate de poluare.
Știu cum să te fac curios.
A apărut telefonul care te scapă de telefon. Nu se poate face chestia asta și ca să te ajute să slăbești ceva invizibil.
Nu te mai duci la cumpărături, nu mai bagi în frigider, e gol tot timpul, e ca la fot.
Știu cum să te emoționezi.
Zeci de pompieri români vor fi în Franța timp de o lună în cadrul unui program european dedicat controlului incendiilor de vegetație.
Știu să convin. Italienii se plâng că le pleacă românii din țară și că îi lasă fără forță de muncă. Au început să ne ducă dorul.
Știi de ce?
Erau mai muncitori.
Pentru că românii, sunt destul de cuminți. După o săptămână începeți să vorbiți cu mâna și după 3 luni nu mai știți româna.
Știu să câștig.
Extraordinar de bine.
Știu, deci știu.